Hey, yo, Max.
Well, 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 if it is an LG,
Hold on, let me tweet this out.
perfect.
How you doing, man?
Oh, not too bad. Just another day in the life. Monday.
hmm
Um, Pretty nice here in Texas, I'll tell you. So can't complain.
Oh man, I bet. I bet. Give me 1 second, man. I'm just gonna tweet this, but you're welcome to talk about the weather. Everybody else, thanks for joining. I'm gonna give everybody a minute to pile in here before we start giving out all the juicy info
Oh
about what to
yeah.
do
Well, we gotta
for
wait
the
until we
end
get
of the
some
year.
people in the space before we start giving out the good stuff. Um,
Exactly.
let's see. Yeah, I'm looking forward to talking taxes. It's that time of the year. We got about a week and a half left here. Um, we just got the
hmm
rake back too, which has been
Oh.
interesting
hmm
for
hmm
any Top Shot listeners in the audience.
Max, if you had to choose an emoji for tax season, what would it be?
An emoji for
No
tax
emojis.
season.
Emojis are a huge part of the first mint Twitter. So what is the
Well, this is this
what's the
is the
emoji?
this is the sophisticated analysis that everybody's here for. I would maybe choose the scroll, perhaps the
Oh,
calculator.
oh wow!
Um,
There's a calculator emoji.
is there?
There's like oh no, there
I
isn't.
might
I
be.
don't see one.
Oh man.
Scroll is scroll is good. Okay, here we go. Cool, dude. Well, yeah, I mean, yeah, there's a lot to unpack, obviously, from this weekend with Breakback, and also like in the larger crypto market. And I don't know how much you follow kind of the larger crypto market, but been having some conversations lately with some good friends about what exactly is transpiring there, and also thinking about myself and it's been a quite an interesting year, let's say, and it's going to be a very interesting year on LG's tax return. Maybe something, the CRA here that we have in Canada, which is our version of the RS.
Right.
Definitely something that they've never seen come from me, right?
Yeah, it's going to be
Not
some new stuff reported on there, I would assume.
it's going to be yeah, somebody's definitely going to look at it for an extra couple minutes. I'll say that somebody's definitely going to poke at it and be like, where's this stuff coming from? I've never seen this kind of activity on this guy's return. But yeah, Max, I mean, like, let's start from the highlight. Also, I could just hear you typing away. I don't know what you're
Oh
doing, but
yeah,
i
well,
could i
LG,
could just hear you
you
smashing.
were the one that made the tweet, and now I got to quote tweet the tweet, so we're kind of
Oh.
trading off here.
Okay, yeah, man, I'll give you a minute. Tweeting it out is one of the most important parts of running a Twitter Spaces.
Oh,
um
it's crucial.
So yeah, a lot of things I want to cover today, and if you guys are just joining, yeah, we're gonna chat tax. We got 11 days left in the year, and if you want to start to prep for your tax season, now is the time to be thinking ahead to it. And we're gonna chat about the implications of that today with Max, who I guess Max, like you're a fully certified. You are a CPA, and you also run your own accounting firm, which may be something people don't know about you.
Yes, yes. So I'm an accountant. My partner, Alex, he is our senior tax manager,
Hmm.
and he is the one who he's a master preparer. Man, he goes out and he's done more of these than you can count.
Hmm.
So I kind of do a lot of the marketing and stuff like that, as you can see here, and talk on the spaces and talk tax, um, and that's how we kind of fit together.
Hmm.
Um, the two of
Hmm.
us anyway. So yeah, I mean, we do a lot of different tax returns, both for small businesses and now for crypto, because honestly, crypto is becoming a huge practice area. I was
Hmm.
telling you on the podcast, I fell down the crypto rabbit hole myself,
Hmm.
um, and realized my taxes were going to be a mess. So we decided, well, we better start offering crypto tax services, because we know the good folks in the space and in the broader Twitter world are going to need it. That's for sure.
Absolutely. And I just want to remind everybody that it's this is kind of a more open session. So we're going to be chatting like some of the stuff that we chatted about in last week's podcast where we had Max on. Also going to talk about like the most recent kind of dump offs we've seen in crypto and some top shot activity as well, because that's where a lot of you guys live, all of us live, and we have a lot of questions there. But also open invite for anybody who wants to ask questions or throw in their 2 cents to this conversation. A lot of people have very specific questions. I particularly find that whenever I talk to my accountant, I always come up with questions that the accountant is like, oh, I never even thought of that, and I don't know why you're thinking about it that way. But I'm just kind of like a bit of a weirdo when it comes to like, is the CRA going to think about the time I bought a coffee, but I put it on a different wrong credit card? And my accountant's always like, I don't care. Like, so I'm always the kind of person with really strange questions. So there are no dumb questions today. This is very much like a learning session. Really, just want to level everybody up and make sure everybody's in a good position to report what will be a very unusual tax year for a lot of people. So I guess Max, like we got 11 days in the year, and this is just circle back on the stuff we talked about last week on the podcast. But like right now, people in the space might be looking at, well, hopefully not losses, but definitely some investments in crypto and probably some gains. Maybe if people even just made a couple of Ethereum trades during some of the peak or peak and valley cycles. And obviously, some people might be looking at some tremendous gains on things like Top Shot and especially in the rest of crypto or the rest of NFTs, things like Bored Apes and all the other PFPs and projects that have come out. Definitely a lot of people who are holding long-term investments, but obviously hard to resist a nice quick flip sometimes. So now we got just a week and a half left in the year. What should I be thinking about right now if I want to be ready for my tax season?
No, that's a great question. And I think that the first thing you got to think about is, kind of what we had talked about on the podcast, which is what kind of situation are you in, right? Because you said, well, maybe, you hope you don't have losses. You hope that maybe you have some gains. But if you do have gains, then maybe how do you offset those gains, right? The first question you got to ask is, what is the situation that I'm in, right? If you do have huge gains, like maybe you had a Bored Ape and you sold it, right? Well, then it's a totally different scenario because then you've got a ton of short-term capital gains that you're going to have to offset. And then maybe you want to think about some like loss harvesting or something like that if you do have NFTs that you can sell. But if maybe you bought a bunch of Top Shot moments in March and that's all that you've bought and sold, well, then maybe your tax situation is a lot more simple. Or maybe you think the Top Shot market is going to come roaring back in the next 3 months. So you're just going to kind of sit on those and wait and see. So I think that, what people should be thinking about is having an honest conversation with themselves in terms of, what did actually happen in terms of the financial transactions that I made this year? And, what kind of position am I in? Am I carrying over a net loss? Am I trying to offset some gains? It's all about, you kind of what your situation is informs the strategy going forward, if that makes sense. And then you kind of start from there.
So a lot of people have been talking about loss harvesting, right? Offsetting gains, however you want to put it. Is that like, I feel like when more people talk about it, the way I've kind of heard in the last couple of days, I feel like then it maybe loses a bit of its strategic integrity because then sounds like that's what everybody's going to try and do. You know what I mean?
Right.
Like if I like for me, for example, it's like, yes, like I bought like a Kyle Lowry, like metallic gold for like $4,000 at the peak of Top Shot. And now it's worth like $500. Like, should I then just be like what am I supposed to do with that if I want to loss harvest, let's say, but I still want to own the moment? Is that even legal to do that? To be like, okay, sell it, $3,500 loss, great, that helps offset, $10,000 I've made elsewhere. And then I just buy it back the next day. And then it's like does that not get me in trouble, or how does that work?
Well, it looks like the IRS is going to institute like wash sales rules starting in either next year or the year after. But for now, it would appear that, and like a wash trading, basically when you sell an asset and then buy it right back, they're going to institute rules where you can't do that in the future. But for now, you can sell that. I mean, theoretically, you could sell that moment and buy the same moment right back. Now, that's pretty blatant, right? But if you are in a moment where, you want to sell the moment and then maybe you sell a batch of moments, maybe you sell 10 moments or 15 moments, right? And then you decide a week later, maybe one or two of them you still want to own. So you go into the marketplace and even you buy a different serial number. I mean, technically these are non-fungible tokens, so you're not buying the same exact one that you just sold. So, it is a viable strategy. And like, would I, violate the integrity of the law by like, going in and trying to flip my exact moment? I mean, I don't think I would do that even if you could, right? But there's no reason why you can't sell, 10 or 15 moments if you are trying to loss harvest and then buy, one or two of them back if you decide you do want a copy of that moment, even though you want to sell it to, establish the tax loss, that's fine.
Also, sorry, I completely forgot to say this. Nothing on today's spaces is financial advice. Please make your own decisions. We're only just here to give some recommendations and chat through some of the questions people have, but do not go do what I just suggested and then come be mad at me if the IRS comes after you in 5 years. It's not my fault.
Yeah, LG just digging in right away.
we're all grown-ups. All right, everybody make their own decisions. And again, we're here to help, but also good. I'd say to another strategy I've used is to literally just ask other people what they're doing, and ask not just your accountant if you have one, but also people that maybe other people you might know who have paid, who've had capital gains in the past, maybe heavy ones, who have done well in the stock market or anywhere else, and ask them how they would handle the situation you're in. Always good to kind of have like a peer group like that. Okay, so wash trading, not something that's going to there's going to be stricter rules coming for that in the coming years, correct?
Yeah, but not at the moment.
Okay. That's kind of freaky. I feel like the fact that we're even talking about it is like a bad sign, but
I know, right? It's very strange. One thing that I think might be helpful is for people is if we just briefly walk through maybe the general framework of NFT taxation that we talked about on the podcast, either to refresh people's minds or to just kind of maybe for people who didn't listen to the podcast,
perfect.
Give a little bit of background.
Yeah, that's what I was going to bring up next, is to just kind of walk through that. And even we had chatted about some of those scenarios, right? Of you bought an ape for $2,000 and you sold it for 100. How does that work? So definitely, if you could kick us off there, Max, in terms of, take us through a couple different NFT buying and selling cycles, and where the taxable events are in there that people should be thinking about.
Exactly. Yeah, I think that'd be good. Let's spend a couple minutes just kind of setting the stage, I guess. So, I mean, when it comes to those NFT taxes, right, let's make a really simple scenario. Let's say that you have no other transactions, but you buy ETH for the first time on January 1st from Coinbase, let's say, and then you transfer it into MetaMask. If you transfer $500 of ETH into MetaMask and you buy an NFT, number one, you are incurring technically a taxable event when you buy the NFT. Let's say you buy it on February 1st, a month after you had bought the original ETH. Well, when you buy that NFT, that Ethereum NFT, right, you are incurring a taxable event, whether a capital gain or capital loss, on the ETH that you use to purchase it. Because think about it, right? Let's say that the price of Ether doubled from January 1st to February 1st. When you buy the NFT, if it goes from being worth $500 of fiat to $1,000 of fiat, and then you buy an NFT with it, you're taking a capital gain on that Ether transaction when you trade it. So that's kind of the weird thing that we have to set up right from the beginning, is that it's possible that especially if you're buying something with crypto, if you buy it with USD, that's different. But if you buy an NFT with crypto, you can be incurring a taxable event when you buy it, which is weird. Because then you obviously incur it again when you sell that NFT. So let's say you sell it for $2,000 worth of fiat, whatever ETH is at that time, right? Then you have a $1,000 gain on the NFT, which you're going to have another short-term capital gain on. So you have the first gain when you buy the NFT for the difference in the price of ETH when you bought versus ETH versus sold it for the NFT theoretically. And then you have the difference between the price of the NFT when you bought it and the price of the NFT when you sold it. And then when you sell the NFT, then you establish a new cost basis into ETH, right? Because you're selling it into ETH, or maybe you're buying it on Solana or selling it on Solana. You're getting SOL, and then you're establishing your cost basis in SOL or whatever currency it is. So then when you go to buy another NFT, you can theoretically incur another capital gain. So it's kind of it's just different than a normal chain, because you're almost buying NFTs with it's almost like if you're buying a stock with a stock.
Yes, exactly. Well, you're buying it with an asset. So it's I guess NFTs are like buying NFTs with ETH or whatever other cryptocurrency is more akin to almost like a barter transaction.
Yeah,
where you're trading one
so
asset for another, correct?
So you have to translate that asset's price back into dollars. And then calculate
at the time of the trade. Yeah, which is unlike buying a stock, whereas USD is always USD.
Exactly. So that's why. Yeah. And if you buy your NFT using USD, maybe you buy Top Shot Moments using USD, that's not going to apply, because you don't actually have to convert it, because you're buying and selling in USD.
Hmm.
So that's what makes NFT trading a little bit fraught.
Hmm.
But one other thing that we definitely should mention is that you
Hmm.
can factor the cost of gas for buying the NFT. You can factor that into the cost basis of your NFT.
Mm-hmm. Of course. Yeah, because that's a fee, technically.
Exactly. It's like
Right.
a purchase fee, for
Yeah.
example. So if you buy it for $1,000, but you have to pay $100 in gas, you
Hmm.
can mark it as if you paid, you know, $1,100 for it.
Right. Cool. Well, I mean, I know that I've seen a few sites around there that kind of around that show you like how much you've paid in gas fees. So maybe that's a
Yep.
little bit of relief for some people, especially me. They go look at that and be like, okay, somewhere I'll be able to say like, 6 grand in gas fees is what I paid. So that's at least a little less off my gains if I have any.
Yeah,
So
I mean,
that's
it adds
healthy.
up,
Yeah.
especially if you're buying and selling
Yeah.
a lot of NFTs. It's going to be, yeah, like you said, it could be thousands and thousands of dollars.
So, dude, but even all that kind of stuff, man, it's like I've made like thousands of transactions probably through MetaMask at this
Mhm.
point. And some of them I've been on like Polygon. So there's, the fee is like nothing. Some of them have been to accept offers in wrapped ETH. Some of them, all over the place. And even now in Flow using like the Blockto wallet, right outside of Dapper, it's like I've also started, especially since FlowFest, we've discovered some really cool stuff. It's like, I've been using that a lot, like on a daily basis. So it's like, how do I? This is the golden ticket. This is the golden question, Max. Is like, how do I go back and see all that in
Yeah.
a way? Because even for me, just to give you, and probably everybody has this, right? Especially if we're comparing it to something like stocks or our investments, 401ks, whatever. It's like I can just go to my bank's like website or app or whatever, and just they can just spit out like for me it's a T5, which is what we have in Canada for your kind of like investment report that you then put onto your tax return or attached with it. It's like I
Yep.
can just get my bank to spit that out for me, and then it says like, here's your cost basis, here's your net profit or loss, and then put this in this box in your TurboTax, and that's it. It takes me 3 minutes, right? um, I doubt we have that in crypto right now. So how can I, other than going through like my ether scan and trying to reconcile the prices and writing out a giant Excel sheet, like how do I manage that?
Yeah, that's a great question. Well, I think you got to break it first into centralized and decentralized exchanges. I mean, like you said, your bank
Mm,
will provide you with a statement on your gains and losses. And in crypto, a centralized exchange like Coinbase, for example, should theoretically spit you out something like that.
mm,
But MetaMask is certainly not going to. So it's kind of on
no.
you to calculate it yourself theoretically. Now,
Mm,
I mean, trying to go through all of that is going to be pretty brutal.
mm,
Obviously, you don't want to go through Etherscan for like 2,000 transactions. That's going to be miserable. So I think, what we've kind of come to is that you take a first pass at it with a software. So we use Zenledger when we do tax returns and stuff like that. The first thing we do is we put it all into a software program to try to minimize the extraneous transactions, right? Basically, get like a framework for it. Like okay, we have 2,000 transactions. Let's try to capture as much of it as we
mm,
possibly can with by sorting it through a software system. Now,
mm,
you got to go back and check to make sure it's all theoretically matching up, and if there's anything out there that's not tracking, or maybe you have like something that the software can't account for, maybe you have a separate wallet, right? Or maybe who knows what like number of situations that you could have, but
mm,
hopefully that at least takes care of the bulk of the transactions and allows you to say, okay, well, we have 90% of it down here. Maybe we have to go through Etherscan, or maybe we have to
mm,
look at a separate wallet, or maybe we have to go through Top Shot sales, a few Top Shot sales here and there, but the majority of it is captured by a program. Because
mm.
otherwise, like you said, you're going to have an Excel spreadsheet, potentially thousands of cells long, rows long, and nobody wants to go through that. It's just going to be miserable.
So what programs would you recommend?
Well, there are a bunch of them out there, and a lot of
Hmm.
them are pretty similar. Like I said, I would
Hmm.
recommend Zenledger. That's just kind of a standard that I've seen a lot of people, kind of coalescing around, if you will.
Hmm.
TaxBit, I've heard is pretty good too. There are a number of them though. Uh, I
Tax
know.
bit.
Yeah, TaxBit.
Okay.
It's a huge company now,
Hmm.
but yeah, that is definitely going to be something that you're going to want to utilize.
Okay. Yeah, I've looked into I've been using Coinly lately. I've been
There you
checking
go.
that out as like as an interesting one, and they do spit out like a for me at least, right? We got to talk about international, right? They do spit out a like a sheet for me to enter into my like TurboTax. That's just like it's called a Schedule 3 in Canada, and they're just
Hmm.
like, here, put this in this spot kind of thing. And there's literally like I watched like a video tutorial of where to put it in, so that was helpful for me. I did that for 2020, but that is not definitely not as tremendous as this year is going to have been. So okay, I'm just going to post. I'm just going to post these in a tweet so people have them. I'm going to put tax Bitcoinly and also token tax is one I had been looking at as well. Um, Okay, so we want to put that in. We want to use some kind of software, some of the software that's out there, and then hopefully that tidies it up for us. Do a lot of these? Does Zenledger account for NFTs as well, Max?
Yeah, absolutely. Now there is some. The thing is, the real question is, are these going to hold up to the kind of scrutiny that they're going to be under this tax season when you have thousands of
Mm,
them? Because
hmm
the downfall of it is if you have traded 1,500 NFTs, for example, right? If
hmm
you have 10, it's going to probably be able to filter that pretty well, right?
hmm
But what if you have 1,000? What if you did off-market transactions?
hmm
There's all
mm.
these scenarios that maybe either the software platform can't account for, or maybe you did it, or maybe you
Gifting,
transferred an NFT to a
gifting.
separate wallet. What if you gifted
Yeah,
it, right? It's
yeah.
you're that is where it kind of breaks down. And that's why I
hmm
say you can get the majority of it, or you can get like a broad
hmm
scope by
hmm
taking it, putting it into that software program, getting a number spit out, but
hmm
there may be some manual reconciliation required there. So it's kind of
Got it.
a combination of man and machine at a certain
Right,
level of complexity.
right. Yeah. Okay, that makes sense. Yeah. So they'd have to. Yeah, so we have. It's still going to take a bit of manual labor, which is obviously I expected that, right? It's not. There's nothing that's going to
Right.
be like perfect right off the bat, but that's good to know as well. That's what people should expect.
Yeah,
Um,
and I mean depending, right?
absolutely,
If
absolutely.
you're really down the rabbit hole and you have tons and tons of transactions, I mean, if you're sitting there and you're listening, you probably know if that might apply to you or not, right?
hmm
Um, I mean, for me personally, I know that there's going to be some manual work involved,
hmm
just because of all of the different transfers. I just know it's not going to come out clean.
hmm Okay, cool. We'll get to a couple questions now. There's still a lot to unpack here, Max, but I do want to hear from people. So we got scary hours if you're there. We'd love to hear from you, and then we'll get to Ted.
Yeah.
Scary if you're
Yeah.
there.
Thank you, LG. And thank you, Max, for the pro bono. I won't call it advice, but for just the information session. But had a question around just, the concept of tax loss harvesting. And I believe in the US, isn't there a $3,000 limit on the losses you can claim? And so, like, let's say you wanted to claim a 20K loss. Can I only claim
hmm
3K next year? And then how much of that 20K can I roll over to the next year?
Right. No, that's a great question. You're totally right. There is absolutely a limit to net carryover loss. So you can take $3,000 of losses, and then you can actually carry over losses to the next year. So in your example, if you're carrying over $20,000 of losses, you can carry over three each year. So then you would carry over three this year, and then you'd carry three the next year, three after that. And I think you can go out three. Oh man, this is really testing me, but it's at least 3 years. And yes, so you're right about that. There is like a limit to how far you can carry it out, but you can't claim it all in 1 year. So unfortunately, if you have $20,000 of losses, you can't write it all off against your income in the same year. That's not a situation we see too often, and hopefully it's not the case for too many people. But there is a limit for sure.
Damn, dude, what? It's only $3,000?
I know, I
Oh
know.
my god, dude, that doesn't help. Doesn't help anybody on Top Shot. Came in March. Uh,
Thanks, Max. Thanks, LG.
yeah,
Absolutely.
scary. Yeah, great question, man. I wonder, man. I got to look into what it's going to be in Canada then, because I don't know. I would assume we have pretty similar restrictions, but I'll have to
Well,
check. I don't know if anybody
the
hears it.
other thing
Yeah.
though is that's only if you have a net loss after like all of your crypto transactions, right? So if you have other profits, it would be set against those profits, not necessarily its own loss. So I don't think hopefully you don't have to worry too much about it.
Okay. That makes sense. Ted, are you there?
Can you hear me?
Yeah, we got you, man. What's up?
Oh, beautiful. Thanks guys for taking my call. So, I am on this NFT site that's technically still in beta. So, I've invested. You buy into it with real currency, but they're not hooked up to an exchange for the opportunity to cash out on any potential profits. So, if I've bought in, if I put in $3,000 over this last year, am I going to be able to claim that as a loss, or should I wait until next year? So how does something like that work?
Well, let me ask you a question about that. So you put $3,000 in. Did you buy individual NFTs, or was it like an investment in the platform itself?
The NFT.
Okay.
Am I allowed
So
to
do you
say
still
which
own the
site it
NFT?
is? You sell it. Basically, you buy in and you get their unit, which they are calling gems, GEMS.
Okay.
But there's no way to cash out. So basically, if you're making a profit, it's staying on the site as, if you bought an NFT for $100 and you sold it for 1,000, well, you can't cash out that 1,000, but you have 1,000 gems to invest in other NFTs.
So how would you eventually transfer gems back into like Ether or something like that?
So next year they're planning. I think it's immutable. But next year there's plans on them connecting with an exchange.
Okay.
But this year there wasn't any. But we're still
Right.
putting actual currency into the site.
Wow. Yeah, no, the IRS is going to love that one. I think
Yeah.
that no, so I think that the issue that you're going to run into there is that you're not going to be able to claim a loss because you still own the asset, even if it's not liquid, right?
Okay.
So you're not going to be able to claim a tax break on that. But hopefully, I think what you're basically going to have to hope for is that it links up with an exchange next year. Then you can liquidate that if you want to. Then at that time, you can realize the gains, and then theoretically report that on your 2023 tax return. But
Gotcha.
the only way you can report it as a loss is if you were to, basically divest yourself from the entire, give up all claim to any of the financial assets that you have or any of the assets that you have, which it sounds like you still have something on the platform. It's just not liquid.
Correct.
Yeah.
Okay. Perfect. Well, I appreciate it. Thank you so much.
Yeah.
My call.
No worries. Good question.
Jonathan, are you there?
Yeah, I was listening to the last speaker, and my one thought on that is that some kind of like-kind exchange almost with the rubies? Since the rubies aren't they're not cash. It's like almost a like-kind exchange more than anything. And I'm curious where that's going to come into NFTs, and people are going to have to fill out Form 1031 left and right when they exchange NFTs with each other. Like, the IRS isn't ready for this.
No, not even close. That's a good comment, because technically, if you were to sell one of the NFTs on that platform or exchange it for another one, even that's a taxable event in and of itself, despite the fact that it's totally illiquid. So that's a whole mess. That's like opening a can of worms right there.
Yeah, no, the like kind exchanges is what real. I'm an actual accountant and I do tax returns for a living, and that's part that scares me with NFTs more than anything is when we really get into it, like how much of it was a taxable event, how much obviously these people aren't putting their money away to a third party to make it a like that kind of exchange, but it kind of was. It's it's an interesting subject, more or less.
Yeah, absolutely.
So here's a question for you guys, Jonathan, since you're also an accountant, and this is also, I think, something that I've been wondering, and I think a lot of other people are wondering, is just yes, the IRS is obviously going to be very interested in this, and they're putting in, wash trading rules for this and all this kind of stuff. But let's say for somebody who has max traded $5,000 worth of NFTs through the entire year, and they're in some situations where they have some of it on a centralized spot where they can't get the money out, they got to trade one NFT for another, whatever all those weird situations are. How likely or unlikely is it that the IRS will actually look into that for this tax year, this time, and in the future. And not to say that you should do things the wrong way because you think the IRS is never going to get to it. But I'm just curious, like what level scrutiny is going to happen for this year for people who maybe, are in the 4 or even low 5 figures of trading.
I think this year is going to be pretty light on the actual enforcement. I think it's going to be more self-reporting this year. Again, I mean, I think the rule that they're trying to get where they can see bank account transactions over $600 is a straight attack at NFTs. But this year, I think the scrutiny is going to be rather low. And what I've told my clients is to do it by project. If you have Top Shot NFTs, what your total for that year is from that one project, and then your next project and your next project. And that's how I kind of look at gambling too, is, with DraftKings, for instance, I want you to show me your whole year. I don't want an everyday one, even though that's what the IRS wants. I know they're not going to come at you if you take it from the whole year and realize everything you've earned or gained.
Yeah, I think the enforcement is going to be really light this year because the IRS probably doesn't have the enforcement staff or the tools to really start going after people like in the next couple months, right? Theoretically, it would probably pick up down the road, but it's not like they're issuing a lot of transparency around, how hard they may or may not come after people. So I would guess that it'll be pretty light, but you never really know until you know.
Okay. Yeah, I mean that's kind of what I've been wondering too, right? Is that it's like if you don't, but then again, it's yeah, I've just been wondering for people who are on the smaller scale if it's worth it to even. Obviously, they should declare it, but just to what level they should feel the need. Like if people are grinding out, Max, like trying to use Zen Ledger and other software to kind of get it down to like, trying to hard to show that they made $2,300 in profit instead of $2,500. Exactly. It's just kind of like, all right, well, like I think it's maybe it's fine if you just kind of round it up a little bit, right? You know what I mean? Like it's.
I think like
that's what I'm saying. Just save some people a bit of sweat there.
I think that like
just
a good faith,
overly worry.
A good faith effort to report, especially like you said in the low 4 figures, right? If you made $800, if you're $20 off, nobody's going to kick in your door. I think that's pretty safe to say.
Do you feel like there's going to be, because remember, I would think of kind of like zooming out in terms of the broader scope of everything here. I'm thinking back to somebody this morning compared this current era of NFTs and Web3 to like the downloading era of 2002-ish, around then, of like downloading movies and all that kind of stuff. And at the time, it felt like some of the government agencies kind of picked out a few people to kind of make an example of, right? Like there was that one like single mom of 3 who got like sentenced to 6 years in jail for like, putting Fast and Furious on Napster or something like that, right? And it was really unfair, but I think they were kind of doing that to set an example to scare people away, and a few other similar cases. Do you feel like that's something that could happen here, like next year? That people like the IRS might just go after someone who's kind of like a small timer, right? Not a huge like mega trader, but somebody who's done decently well and kind of come down hard on them to set an example and maybe scare people away.
It's interesting. Oh, go ahead, Jonathan.
I think it's going to be similar to how they started taxing tips. So they put it on the employer to tax the tips, to report it on your W-2. So I see them going after going after Dapper Labs, going after some of these bigger OpenSea somehow to make them report something to report the taxable transaction over the individual. Now how are they going to do that? I have no idea, but I think that's the way we're going.
I think trying to have leverage or like get leverage over individuals is always going to be a difficult game for the government to play, right? Like trying to find and prosecute people who are, you know, making a couple $1,000s is just almost always a extremely inefficient use of time. It's almost always going to cost them more money to try to go after that person than to actually they'll make by like recouping it. So I would find it really unlikely that they'll go after small time individuals to make an example in the next year or two. Now, when they have more sophisticated tooling and reporting in a couple of years, I think that basically what they'll try to do is pressure the institutions, like Jonathan said, to like issue more sophisticated documentation on who's making money, and then try to match that up with individual records, and then to start sending out letters in accordance with like what they're getting from exchanges or institutions or wallets. But I don't know. I mean, look, it's always like a kind of a matter of conjecture, because it's hard to say like if they will make an example out of people or not. I would guess that they won't, at least in the short term. But you never really know for sure. But yeah, like I said, I don't think so. I think I agree that they'll put more pressure on institutions, if anything. But you know, it's not guaranteed that they'll do anything at all, even in 2022. But we'll see.
Do you think, Max, that there's anything right now that, you know, NFT collectors are doing that they shouldn't be? And this is like purely like based on just habits that you've seen or things that you've seen people in Discord talk about that they're doing. And I mean, just anything like, okay, making a bunch of different accounts to be eligible for different airdrops, like all that kind of stuff. Like, is there anything you're seeing people do right now that you're like, probably should avoid that for future potential repercussions?
You know, here's what I'd say about that. Anybody who is doing things like that they really shouldn't be doing, they probably know they shouldn't be doing, right? If you're doing the best you can and you're just like, you know, oh, I'm going to buy this NFT, or oh, I'm going to sell this NFT, and it's just motivated by what you think you should do, then it you know, people like generally know when they're crossing the line. If they're like, oh, I should sell this NFT to my friend for, you know, $20,000 less than it's worth, or transfer it to my own wallet and then like mark it as a loss or something, you know what I mean? Something like that. But I don't need to tell you not to do that. I mean, you know that you shouldn't be like purposefully selling an NFT for way below its market value to like tell the government that it was worth less than you bought it for, right? So in general, I think that, you know,
don't commit fraud. Yeah, you're right.
Yeah, as long as you're
don't accidentally commit fraud. Okay, that's
yes.
the main thing.
There's not a lot of things that I see on a daily basis. Now, I mean, I'd say more in the like coin space. There's things going on where like not so. I mean, in the NFT space, it definitely happens, but honestly, more like when it comes to tokens, like people conspiring to pump tokens and stuff like that. But if you're in a group and you're conspiring to pump a token, you probably know that you probably shouldn't be doing that as well. So I would say that it does happen in the NFT space, but there's a lot more unruly behavior going on in the token space, and there I think people know. You know.
Well, what about like tweets and influencers, Max? Like, I obviously I think even for us at First Mint, where we're like, hey, this set's on fire, and if I happen to own some of those, or even some of the more like blatant people in the industry who like literally acknowledge that they might be pumping their own bags when they're tweeting and have, you know, 100,000 plus followers, like what happens to those people?
Yeah, I mean, I wouldn't say I'm an expert on like the legal aspect of this, but what I would say is that if you own a project and you're excited about it and you start tweeting about it, I mean, I started tweeting about Top Shot, right? And did I own Top Shot moments? Absolutely. I own Top Shot moments, and I was really excited about it, and I was really into the community. And so I started tweeting like all different sorts of like market metrics and stuff, for example. I don't see any problem with tweeting about projects that you own and are excited about, and you're just trying to be a part of the community. Now, if somebody is DMing you on Twitter, hey, I'll pay you, you know, 2 ETH if you tweet this text about this project, but don't disclose that it's an advertisement. Well, that's something totally different. So I would say in general, I don't think there's a big issue or any issue with tweeting in support of projects that you own because you're excited about them, or just like because you're interested in them. Because then it's like saying, oh, like you can't tweet about Elon Musk if you own Tesla stock, right? It's like, you know, you can tweet about Elon Musk if you own Tesla stock. It's not that serious. But where it crosses the line is if you're getting paid to support something and you don't disclose that you're getting paid to do it. That's a totally different situation.
Yeah, of course. Yeah, and that's a more legal conversation than anything else. And we've already seen that happen in social media, right? Where Instagram and other platforms came down hard a couple of years ago on influencers who weren't disclosing that, and now you know, they have to disclose, and they have the option to even put that in the metadata of the post, right? So that's something to think about. Jonathan, you got something to add?
I was just going to ask Max about what he thought about the tax implications of airdrops. You know, maybe not so much like PAX and NBA Top Shot, but I know, you know, people got tens of thousands of dollars in ENS and stuff like that. So I'm curious where he sees that going with the tax issues.
Yeah, that is a great question. I think that in terms of those airdrops, like let's just take the ENS one, for example. The ENS one was really kind of fraught because there wasn't enough liquidity when the ENS drop originally happened. So the price looked like it was going to be like, you know, or it was showing like $2,000 per token. But then as soon as there was sufficient liquidity added on Uniswap, all of a sudden the price drops to like 30. So technically, if you get the airdrop and the price is immediately like 2,000, but then it drops to 30, it like instantaneously, at what point did you actually receive the token and what was it worth at that exact time? Now, when it comes to things like that, I mean, my opinion on it is just that you should make a good faith effort to like reasonably report it. So, I mean, reporting it at $2,000 would just be ridiculous because like it wasn't actually worth that. But theoretically, I mean, I don't see any way around taxing it as ordinary income with a good faith estimation of the fair market value at the time the tokens were received, not necessarily when they were claimed. But within that framework, there's a lot of room for debate, I would say.
I guess but
that's how I see it.
My question, Max, is I kind of see it as a gift, and it's like, you know, the gifter is responsible for the tax if my grandma gave me 15 grand and it's over the $12,000 limit. I know it's not going to be close to the lifetime limit, but you know, I see it as a gift almost, and it's like it's almost on the institution to pay that tax.
Right. Yeah, I think you could potentially make that case. I think where I would probably be reticent to do that is if, let's say, you worked for a Fortune 500 company and they did like a Christmas program where they gifted employees stock for Christmas, let's say, right? They gave you, you know, 0.001 shares, which was worth $2,000. Merry Christmas for your bonus. I don't think you could treat that as a gift because it's, you know, from the company. And in this case, an airdrop is most likely from a protocol that's gifting you ownership of the protocol, or at least ownership over the governance token of the protocol. And it's not from like a friend or family. It's from theoretically a business type entity, a DAO. So I suppose, I mean, I can see your case for a gift, but I don't know. I don't know if the IRS would see it that way. I mean, who knows how they would see it? They probably don't even know how they see it.
I would say it's like a dividend almost is where you
it could be. I could see it as a dividend, but then you're taxing it at a lower rate than capital gains, which I would appreciate. But then there comes a whole lot of more reporting to that, and Max can probably talk more on that than I could. But
I think also I can give a bit of perspective there as well, because obviously I'm not a tax expert, but you know, First Mint was in the Seed Club, which is like a social token incubator at the start of the year, and learning a little bit from them is just like, you know, one of the big reasons that a lot of these companies, when they decentralize, become a DAO, one of the reasons they gift the token or airdrop it rather than sell it is because then they skirt the part that helps skirt kind of the part where it's a security, right? Because you're not selling anything, you're literally just selling you're giving a worthless token, which then if people add liquidity to the token on a decentralized exchange, that's not your responsibility. Right? Because it's like those tokens, those ENS tokens were never sent to people so that they could sell them. That's not the purpose, or at least not on paper. The purpose on paper is that these are just tokens for you to vote on something. So they're worthless, and at no point does ENS provide liquidity for those tokens, right? ENS just says, "Hey, everybody, here's some tokens. They're voting shares for you to vote on what happens with our protocol." That's it. There's no value attributed. However, if third parties or consumers decide to use something like a decentralized exchange like Uniswap or SushiSwap to give it liquidity, and then people sell for profit, that's like technically not really ENS's responsibility, or at least not yet. And that's why airdrops are so rampant, is because it's a way for, founders to kind of exit with some liquidity, but also for them to essentially get their token out there without selling it. Right. By just giving it. And if the market decides it's worth something, then great. That's the market's problem. So it's kind of passing that buck in a sense of where the security law comes in.
Yeah. And it's just funny that it's done that way, because as we know in practice, it's kind of like, it's just funny to say, like, well, if somebody were to add liquidity to Uniswap and somebody were to then sell it for a profit, it's like, oh, I wonder if that's going to happen. And it's funny because that actually ties into what we were talking about earlier, because like I was saying, the price of the token was so high at the beginning because there was no liquidity, right?
Mm-hmm.
It's by design.
Well, that's it, right? Well, that's exactly it, right? And it's not, so long as the company says, or even if they are technically a company, which in some cases they're not, they might be a nonprofit or something like a DAO registered in the Cayman Islands or something like that. So long as they're just like, hey, like, yeah, we just gave people something random, and that's also where something like airdropping NFTs also makes sense, right? Like airdropping, like Bored Apes giving everybody a dog or a Meebit or anything else that we get. It's kind of like, hey, like we're not assigning value to that. We're just giving our collectors, our members, a free gift that is technically a collectible. It's just an item, and they can use it as they please. But then naturally, of course, Bored Ape dogs go for like 4 ETH, right? So it's an area of policy I'm curious to see how it evolves.
I think you could certainly,
as that becomes normal.
Yeah, exactly. I mean, I think right now you could make the case that, okay, the Bored Ape, dog, right? The Kennel Club, that's worth 0 when it gets gifted. And then when you sell it, let's say you sell it for 4 ETH, you'd mark it as either a short-term capital gain if you sell it in less than 12 months, or as a long-term capital gain if you sell it in more than 12 months. But then you basically are just reporting the full 4 ETH as like a profit on the sale, instead of reporting 4 ETH as regular income when it gets gifted to you. And then if you sell it for 4 ETH, then you owe nothing on the sale. So like it's not a semantic difference in a sense that those events can be taxed differently. I think that frankly, you can probably make the case for either. In the future, my guess is that the IRS would tax, if airdrops remain as prevalent, they would tax it as ordinary income at like a reasonable fair value. That's what I would guess they would do, or at least what they would want to do, right? But then we get into kind of a paradox where if the IRS normalizes those types of airdrops and gifting rules, right, does that mean they've also normalized forming these organizations to an extent that they can actually sell the token and they don't need to execute an airdrop anymore? So by the time we solve this problem, does the fact that problem is solved become in the impetus for a new distribution mechanism? That's possible too. So it could have just kind of invalidate the whole thing, or not invalidate it, but just change the dynamic, I guess. Because I'm sure there'll still be airdrops in some form. But
on that topic, I'm just looking through some of the questions in the chat, and we kind of posted up for people listening. The second pinned tweet is a link for you to post any questions that you have, and we'll try to get to most of them, if not just a few of them. But there is one here about, I just suddenly can't find it, from Top Shot DE. Packs are like playing slot machines, so I have to pay tax or not. The randomness factor is so high, so I say no tax. So that's actually a really good question, right? Because that's actually a really interesting one. Because let's say, tomorrow it's like, there's legendary packs and people are going to pay $1,000. And then in there's 10 different moments. There's metallic golds, there's base, and there's, the legendaries. And let's say they pull, Kevin Garnett, and they sell it on marketplace for $6,000. And is the cost basis $1,000, or how does that work?
Yeah. Well, let's just say that the IRS has not issued specific guidance on Top Shot pack drops. But with that caveat, I mean, if you sell the legendary moment for 6,000, you know, you can't just say it's a crapshoot, so you don't have to pay taxes on it, or at least, you know, that's not the way that the IRS would theoretically interpret it. I mean, you could do a couple things. Like, you could mark theoretically the pack cost as the cost basis. You could mark a portion of the pack drop. You could just say, okay, well, if the pack is $1,000 and there's 10 moments, then each moment's cost basis is $100. You could you could try to mark it like according to like the relative value of each moment, because then you could just mark a common moment as $100, sell it immediately, harvest the loss. You might want to do a little bit more for a legendary pack in particular, sophisticated cost basis analysis on like what the fair value of the moment is at the moment you rip the pack. But generally speaking, I mean, you're going to have to find some way. If you sell the moment for $6,000, you know, you're going to have to find some way to establish a cost basis for that moment, and then the tax implication of selling it at that cost. However, you know, like Jonathan said earlier, we'll see if the IRS not cracks down, but forces more reporting in the future from institutions like Dapper Labs. And if that information is going to be reported out going forward, right? Like, oh, this person made a $6,000 sale off of one of the moments that was in the pack. And then they'll just decide what the cost basis is for you at that point.
Well, I'm assuming that's something that's going to come from anywhere where we are KYC'd with the NFT project.
Exactly.
Right? Like I feel like that is kind of the inevitable, like, you know, and Dapper clearly has wanted to play by the rules and be like a normal, healthy, like, corporation. And that, like, my ideal there is that eventually, you know, I was saying in Canada, we get a T5 form for our investments. Like, my ideal is that I eventually Dapper just spits that out for me.
Yes.
Right? Just like my banks. And that might not be a next 12 months kind of thing, but maybe next couple of years thing, where it's just like, just make it easy for me. You know, because I'm not trying to hide anything. But on there, you know, and maybe like you guys were saying, yeah, that's where the government entities put pressure on the institutions, because then it's like, okay, so how does Dapper view something like packs and reward and challenge rewards, right? Like, what's your cost basis for a challenge reward? Is it free? Right? Like, you know, how does that, you know, if I do a challenge and then I sell the challenge reward for, you know, $800, like, was that free for me? Is that how it works? Like, you know,
right?
Or when it's given to me as a challenge reward, is that, and I've been given an item that's worth $1,000, is that taxable? Right.
Right. Yeah. No. I think in that situation, it'd be similar to an airdrop.
I'll say that I do have a few guys that I do tax returns for now that sell and buy cardboard cards, but you know, they're buying individual cards, so the cost basis is pretty simple to figure out. When they bought them and got them in a pack, we just have to count the cost basis as zero, and hopefully they hold it long enough so they only hit long-term capital gains rates instead of short-term capital gains rates. And you know, that information Dapper could produce tomorrow, at least for individual cards. The packs, like Max said, I think you probably put a cost basis of, like, you know, the rarest card, the deck of hoops. I think you say that was 800 of the pack. You know, that's what I would look at.
Yeah, that makes sense.
There's also another question here, and I saw a few people asking questions about the packs, so I feel like we kind of answered that, but also even deeper than this, and I'm sure there's no exact answer from Schubert. How would you record taxes on trade tickets for Series 1 reserve packs? And that's a whole other level of, like, when you burn something, which trade tickets, they're not being burned, but there's a lot of other NFTs where you burn something in exchange for something new. Do you then, I would assume then that you get taxed on the item when you burn it, on its value at the time. Right.
I would call that that would be definitely a like-kind exchange, from my opinion. Which, I mean, there's some reporting rules there that the institutions would have to hold to, but I think that should be a like-kind exchange. If you're not actually getting cash, if you're just exchanging one asset for another similar asset, you should be able to fill a 1031 out and just have a like-kind exchange there.
Yeah, I mean, you could have a like-kind exchange, or otherwise you'd have to, I mean, if you exchanged a moment for a trade ticket, you'd have to say, okay, well, that moment's gone. So I'm taking the loss on that moment, but then I'm getting the full gain of the S1 pack because my cost basis for that is 0. So, I mean,
Yeah,
those are kind of the only ways to do it.
S1 packs, I mean, I would probably say that, your cost basis is whatever it costs to get those 500 tickets. I mean, was it you bought, packs for $9 and, every one of those was $3, or did you buy 300 of them for $1? You could probably get your cost basis pretty easy on the S1 packs, in my opinion. And then what I would do is, like Max said, is, you have, say you got all of them for $1, so you have a $500 cost basis in that S1 pack. Then I would probably, the most rare card I would associate with the highest cost basis of that 500, probably 40% of it, almost, maybe 30.
And LG, I mean, like we were talking about earlier, that's just yet another one of those situations that might trip up tax software. I mean, I don't know how much the software programs know about trade tickets.
Yeah, well, that's it, right? Is that, well, a lot of those tax softwares I don't think currently integrate with like Dapper or Flow either, right?
Exactly.
So maybe in the future, but that's the thing. It's like they mainly just, from what I've seen, and I haven't used Zen Ledger there, but it's just like you just plug in what your addresses are, and then it just kind of spits it out for you. So
Exactly.
Now as we get it, even into a cross-chain ecosystem now is something that is going to take, I think, a couple of years to develop in terms of even just the software helping you. And maybe over time, all of this comes together, right? Like, I think there's a much brighter future for NFTs and taxes, where it's clearly a big nut for people to crack. Where like the ideal platform in the future is, you go sign up for like a Zen Ledger and you plug in all your crypto accounts, and then it already comes preloaded with, oh, you have a Top Shot account. Looks like you got some trade tickets and some challenge rewards, and we've already calculated all that based on your local regulations for where you live, right? And
get a 1099 NFT. Instead of 1099M, you get a 1099 NFT.
It's not impossible, man.
I think it's coming. I think that's the way we're going, and I think that's what we'll see is you get a 1099 some form.
Yeah, it's also in the best interest of government and policymakers to get on with this stuff, right? To think further ahead, because right now we're trading NFTs as basketball highlights and dogs and all that kind of crap. But like eventually, there's a possibility we're buying, like buying tickets to a game is an NFT, like your driver's license is an NFT, and that's not like a this year thing, but that's like something that'll happen eventually. So they got to figure out soon. Like it's less so like, hey, how do we tax all these people with their collectibles, but also like just in general for government, like wrapping their head around Web3 and how that's going to impact a lot of areas of technology. So there's a lot of work to be done there, amongst many other things that policymakers are currently working on, I'm sure. I see a few other questions here, but I don't want to keep us too long. Max, like going forward, if people do their tax software, like what are they, if people are working with accountants, with people like you or whatever, how do they approach that? If you're lucky and you have a crypto friendly accountant, great. But if you don't, how do you manage that?
Yeah. Well, I mean, look, we are happy to help members of the community. So, I think when it comes to accounting, if you want to find a crypto friendly accountant, we're happy to help. If you're approaching it with a local accountant that you've used, hopefully they have some knowledge of what NFTs are, what crypto is, and how it all works. You can hopefully, maybe they have a software platform that they use that they can help you with, or maybe, they can give you some specific guidance there. But like we've talked about, it's not standardized, right? It's not like there's one tax software or one form where it's like, okay, if you have this form, you're set. It's very much piecemeal. So it's kind of figured out, I might use one software, but somebody else may use another software, or maybe somebody's just going through Etherscan and calculating it manually. Who knows? But it's very fractured. But I would say, hopefully they know something about crypto and they can help you walk through it.
Mm-hmm. Absolutely. And we do have another question here. And we got Andrew too that I want to hear from. But there was one question about what do you do if you lost if you're one of the unfortunate people that was compromised and scammed out of your NFTs and or crypto, how do you go about reporting that?
Yeah, that's a tough question. If you were scammed out of your crypto, I guess, oh boy, that's a situation I would definitely talk to your accountant about, because here's the thing about that, right? What if you, like, I'll paint two different scenarios here. What if you bought crypto for the first time? You bought like 2 ETH, you transferred it to your MetaMask, maybe you got a couple NFTs or whatever, and then all of a sudden you're just wiped out, right? Maybe you get 2 ETH stolen. Or what if you have 10 wallets, you're an active trader, you have a Bored Ape that you sold, and then you put part of the profits into another wallet, and then that wallet got compromised, you got hacked, and you lost 1/5 of the proceeds. Those are totally different scenarios, right? Because in one of them, you bought some and then you lost it all. In another scenario, you had massive gains, then you lost a portion of your gains, right? So, how do you treat those two situations? They're totally different. So, I mean, if you did lose all of your gains, I guess I would want to know like the circumstances, like how you lost it, if there's any way you could get them back. And if you can't, like how to write it off as a loss, or write it off against your other gains. But that is a terrible situation. I'm sorry to whoever wrote that. If that happened to you, that's a miserable situation.
That's a terrible situation. Another one, if you bought an NFT, or if you bought an NFT that airdropped a bunch of new NFTs and then burned the original, do you recommend splitting the original cost basis across the airdropped NFTs? See, this is what I mean, the kind of questions that it's like I hadn't thought of that other people are good at thinking of. So thanks for that, Ricky.
Yeah, well, that's, like we talked about, there's a million different scenarios, right? I think that, in general, like in theory, that is like a pretty reasonable approach. Like how else would you do it, right? You could either do the like-kind exchange, or you can split up the cost basis between the 2 or 3 or 4 NFTs. And then if you sell them, you calculate the gain on those accordingly. I think that makes complete sense. Now, obviously, I don't want to say, oh, yeah, just go ahead and do that and, tell them I told you so. But yeah, I mean, there's only so many ways you can do it. And I think that is probably the one that you'd have to settle on and go with.
Okay. Yo, Andrew, Cold Brew King, what's up?
Yo, I am grocery shopping. What's up? I'm trying to multitask.
That's cool.
Yeah. Yeah, my question, a lot of majority of what's been said, I was going to chime in and agree with. My one thing I would like to add to the general government sentiment is if you think the 85-year-olds that don't understand how technology works or the internet has any clue what crypto is doing for the next year or two, you're sorely mistaken. And then on a back burner note, if you're someone that made a killing in crypto in the last year, they're going to look into you. But if you just sold a few Top Shot moments, I think listening to these guys is pretty straightforward, great advice. As far as what would you consider dealing with asset columns and treating things as such, as far as would you include things as how DFS is treated from a gains and loss perspective, or is it more on the art column? Where would you place these kind of things as far as categorization, that kind of organization element?
Yeah, NFTs, there's definitely some debate. NFTs can be collectibles. So yeah, you could put it on art, typically or in the same place that you would put art. Typically with crypto and coins, it's going to be capital gains. And even when it comes to NFTs, like most of the guidance that the IRS has, I mean, in the limited guidance they've given, they've basically said, treat it the same as property. It's all capital gains. Like we'll issue more thorough guidance later, but for now, just treat it as property. So in general, I would say the conservative approach for most things would just be to kind of follow that and put it under the, short-term, long-term capital gains framework. But in the future, things could be segmented out. Who knows? But it's pretty vague for now.
Okay, and my other one follow-up would be, wouldn't it also be more beneficial to lean on the dappers of the world, that if things are going to come down the pike, they would hear from it before the everyday person would first anyway, on how they would deal with these precautions?
Absolutely. I would say so, because the thing is, the IRS only has so many resources, right? Like they can't just say, okay, we have 50 million people that we know traded crypto, so let's investigate the individual cases of all 50 million of those people. So like you said, right, it's going to be the low hanging fruit. It's like, okay, if we have extremely constrained resources, and not only are we going after crypto, but we have to police like corporations, we have to police like normal business owners, traditional art. They have to police a ton of different things, right? So crypto is just one piece of that. So is the solution, let's investigate all 50 million people who own crypto? Or is it, okay, we know that we can lean on Dapper Labs. We know that we could try to press them to provide more documentation or things like that. We know that we can press more on exchanges. And we know, if there are people who own tons of NFTs or have done tons of trading, let's focus on the highest volume, highest income traders and focus on them, right? That's just like the natural strategy of where it's going to gravitate. So like you said, I think it makes a lot more sense. I mean, if it were me, I think it makes a lot more sense to put pressure on the institutions and the highest net worth individuals. But one of the issues that they're going to face is that it's going to be really hard for them to try to convince a company like MetaMask to provide some sort of 1099, right? That is an uphill battle because they're not really like a centralized exchange and they're not KYCing their customers. So either they're going to have to start KYCing their customers or they're not going to be able to provide that data. So unlike the traditional world, where you can actually request that a bank KYC the customer, provide a 1099, etc., you can't really expect that same sort of behavior from a lot of these crypto exchanges because they operate on a different paradigm, which is wallets instead of accounts. So it's going to be a little bit of a mix of how it's enforced. It's a little bit of a tightrope that they're going to have to walk. And like you said, a lot of these people are 85 years old or, are not even familiar with crypto, aren't trading at all in their own life. They're like, oh, you mean that Bitcoin thing? So when we talk about burning an NFT, turning it into 4 other NFTs, it's like, okay, exactly. we're so far downstream, it just makes no sense.
They haven't figured out what GPS is yet. I think we're okay.
Yeah, GPS is still, they're still warming up to it. So it's going to be a while. And like I said, I mean, it could be 2023, 2024 before we get definitive guidance or before any of this starts to move. So for now, it's kind of people are on their own.
Question I just pinned. How is taxation handled with regards to the Top Shot give back that many people received over the weekend? So how is Dingling going to declare his $151,000 of give back?
$151,000 on the rake back.
That's what they got.
That is an interesting
That's
one.
what Dingling got. And they were very generous with it.
That is absolutely insane. By the way, I would like to have a $151,000 rake back. Jeez. Well, I think that, when it comes to the rake back, the people who receive the most in rake back are theoretically people who either lost or don't have a lot of gains to offset, right? Because if you bought $20,000 of moments and then you sold them for maybe $5,000, then you have a net spend of $15,000. So hopefully the people who got those big rake backs are either people who are holding long-term or who, have sold at a loss and as a result are maybe offsetting losses as opposed to adding to gains. So in a lot of those situations, my guess is that maybe you have $2,000 of losses, you get $500 in rake back. Well, now we're talking about $1,500 of losses instead of gains.
Man, good problem to have, I guess.
Yeah, less losses. We'll take what we can get.
And on that same, I know we already covered it, but if I'm gifting something to somebody, like I gifted a lot of people Top Shot moments at the start of the year, and thankfully they were only worth like a couple bucks at the time. When I gifted, and I feel like we already covered this today, but it's just something that just came to mind because I know Dingling was giving away a lot of moments. How do I work through that?
Yeah, no, that's a good question. What I would recommend in that situation is, it's a gift. So it's essentially like saying like you're renouncing your claim to that kind of to that asset, for example. So if you bought it for $5, and then you gave it away, you should be able to, write off that $5 against your gains on whatever Top Shot moments you sold.
Okay, that makes sense. Snooze, you got a question?
Yeah, all right, guys. So I was wondering, do we know, we've all KYC'd on Top Shot. Do we know what they are sending to the government?
Well, if we get 1099s, then we'll know for sure. But until then, I am not sure if they're going to be, I mean, sending 1099s or not. My guess is that for now, they're not reporting anything. That's my assumption until we hear otherwise. But, could they theoretically report 1099s? Well, they certainly have enough information to theoretically scrape one together. But until we get something, I don't think they will. That's just my guess.
Thank you very much.
Another question from the chat: what happens if you own a project? And this is this is a relatable scenario, Max, probably for a lot of us who maybe aped into a lot of PFP projects, random ones.
I already know what's coming, LG.
If you own a project that literally went to zero and there's no liquidity, but you still own it, can you write it off as a loss?
Yep. Theoretically, you should burn it first or send it to a null address. Because what if it comes back, right? You write it off as a 100% loss, and then all of a sudden it spikes in value. I mean, you shouldn't be able to write it off as a complete loss while also retaining it, just in case it goes up in the future.
Yeah, that's fair. That makes a lot of sense. Yeah, you can't. Yeah.
But yeah,
that's fair.
Yep.
Yeah.
You can write it off if it goes to zero and you dump it.
Yeah. Okay. Yeah, I believe that there's actually, I could pull it up. Zach, I know you're listening. I know that the Quad had shared this system with us, that there is a program that will buy your like shitty NFTs for like 0.0001 ETH kind of thing. But you can like it. They will buy them in a sense. So there is like essentially like a scrapyard of NFTs where you can
where you sell it for like a penny.
That's it. Yeah, exactly. So then you can harvest that as the loss.
Yep.
I think is like primarily designed as that. You'll just have to pay the gas fee, which also will be beneficial for you to offset more losses as fees and all that kind of stuff. So
that's right.
Yeah, that's a good one to have. And here comes Zach. Speaking of Zach, he's going to come share with us, or maybe ask a question of his own. Zach,
Hey guys.
Hey Zach.
So my question is about specifically, I have a Genesis Cyberkong, and then other games like Wolf Game that have come out. Where you're claiming wool or claiming a token like that.
Right.
How do you determine something like the cost basis for something like banana or wool or a token that's kind of being generated just by another NFT asset?
Right. Yeah, I would consider that ordinary income. Now, I think there's a difference between if you're like claiming the token versus like something like rebases, for example. If you're in like Olympus or something like that, that's a whole can of worms. But I would consider banana or wool, ordinary income. And you can, I think that like in some of these, you're like getting it all the time, right? It's like, every second it like ticks up, right? I don't think that you would report it on a second by second basis. So when it comes to those assets, you basically just have to find the most logical way to batch them. And then once you determine the most logical way to batch them, like let's say you claim it every month, right? Okay, well, we'll just say that when you claim it every month, that is the income event. And then report it that way. And then if you were to sell it, calculating the capital gain and stuff like that accordingly.
Gotcha.
So lots of fun.
Perfect. Though. That's very helpful. Appreciate it.
Yeah, absolutely.
Zach, what is the name of that thing that Quad keeps sharing with us of where you can sell your crap NFTs and they'll take them for like a penny? What is that?
I think it's called harvest.art.
Oh, yes. Okay.
And there you go. Harvest.art.
Yeah. I think it's just a smart contract that basically buys the NFT for like 0.00001. But so I recently did one of those, and it looks like the transaction's almost like a gift more so than, I don't know. It seemed like a weird transaction when I looked through the Etherscan. So like, I'm not sure. I think you could claim that, I guess, if you did do that. I don't know, Max. I mean, you would know better than me, but it looked weird. It didn't look like I sold it for 0.001. It kind of looked like I just transferred it.
Max?
Yeah. Yeah, no, I mean, I'd have to just take a look at it, but I would imagine your cost basis either way is going to be pretty low, or the final selling price, right? Whether it's like a cent or zero, you just calculate it, the full loss.
So like you said before, for a project that did go to zero or pulled the rug or something like that, just sending it to the null address is enough. Like, you don't need someone to physically buy it from you for 1 cent or something like that. You think that transferring it to a burn address or something like that is enough to claim the loss?
I do. I think so. Yes.
Okay.
Other people may feel differently. Obviously, it's kind of the IRS hasn't issued guidance on it like they haven't issued for a lot. But like, in my opinion, yes, like sending it to the null address is enough. I would say, yeah. That's how we're treating it.
Perfect. Good to know.
Well, I'm just posting the link up so we can all look at it. Here we go. Just gonna pull it up. Cool. Did you guys, Max, is there anything else we need to be thinking about? I'm just looking at other questions. See if there's anything else we need to chat about today.
Oh man, what else isn't there to think about, LG?
There's so much. Obviously, there's so much more we could chat about. But I feel like this has been pretty good so far.
Yeah, and you know what? Here's what I'll tell the people too. We do this professionally, and that's why we're in it with LG today. If you want to talk to us, or if you're worried about your personal situation, the link in my bio is to our website, and you can, if you're interested in potentially doing your taxes with us or having us consult with you, you can go to our website and book a consultation to talk about it. So if you do have like a really complex situation or unique needs, you can book through the link in my Twitter bio. You can book time and talk to either like my partner and I about this stuff. Mm-hmm. So I thought I'd throw the plug out there, LG, while we're here.
There it is. There's the plug. No, but
there's
it, man.
The plug. Look, come on.
No, but that's it. It's nice to have a friendly face, somebody we trust, in the community who can help us navigate that. And then, and if people want, it's nice to keep it in the family. They come over to you and get some professional help from you as well, on top of the free advice today. So I think that's great. I think it's a big thing. Andrew has put his hand up in emoji form. Andrew?
I didn't want to interrupt. Really quick, I assume post fees for dealing with anything Dapper flow related, because it's coming out of the Dapper balance. So if you sell something for $100 and there's a 10% fee, wherever that fee is going to, that it's not in your pocket as the result of the transaction, you take the tax on the final price. Is that correct?
Exactly. You're 100% right. And I can hear you checking out in the background. So it sounds like maybe you'll be out of the grocery stores.
I'm doing my best here.
But no, you're totally right. If you sell it for $1,000, there's a 10% seller fee, so you only end up getting $900 because Dapper's taken $100. Then yes, correct. Your price that you'd pay tax on is the $900, not the $1,000.
Thank you very much.
Right on. Cool. I think we could probably wrap up there, Max. We got the plug in. So guys, if you want some actual professional help, hit up Max. If not, hope you enjoyed the session today. And Max, maybe we'll run it back once it's actually tax season. When it's actually time for people to figure this stuff out, because it's always taxes is one of those things. People, this. People don't do this shit in advance. People do it at the last minute.
No. Nobody does it. LG. I don't even do it in advance. Okay. So, and if I don't do it in advance, that means nobody's doing it in advance, right? Exactly. So, no, but it is loss harvesting season. So that's why we kick it off, but we'll definitely be doing it closer to tax season as well, when people start to realize, oh shit, I'm going to actually have to do this. We'll be back.
So there was a comment. I'm just seeing it now. Somebody wrote, in response to a comment made on this, there is no 1031 deferred exchange on personal property. So if NFTs are considered personal property, trading an NFT for another NFT would be a taxable event.
Yeah, that's how we're generally treating it. Because like I said in the beginning, like when we were first setting it up, like you buy the ETH, right? Then you buy the NFT and you treat it as if you had sold the ETH, and then you sell the NFT, you establish a new cost basis in ETH. That's how we've been treating it. I know Jonathan, he was talking about the 1031s. We haven't been doing that. But that's a good point.
Okay, cool. Well, right on. Well, Max, appreciate your time, man, and appreciate everybody else who came up and asked questions, and a lot to chat about. So like I said, we'll chat about it again. Guys, show your appreciation. Let's see some emojis, throw up some peace signs, some fists, some hundreds. show your appreciation. It's the Twitter Spaces equivalent of people applauding at the end or something like that, or whatever. But throw some of those emojis. Show appreciation for Max for taking the time today to kind of walk us through a lot of our questions here. Max, thank you so much. Guys, if you want to check out kind of the full episode from the first minute about this stuff, you could head on over to any of our podcast channels. It's linked in our bio. It's an episode it's probably 4 episodes now, last Monday. So check that out, last Monday, December 30th. So it's 3 episodes ago. Anyways, we'll probably be back on Spaces shortly here for the Ballers Marketplace opening. We'll close the space down for now and hop on for that in a bit. So thanks,
LG,
Max.
you never rest, man. You never rest.
Yeah, it's I was trying to take some time off for the holidays, and then it was just like, oh yeah, just a bunch of shit's gonna happen at the same time. So I guess not. But this is a fantastic chat, man. Thank you so much.
Absolutely. Thanks for having me, LG. Appreciate y'all joining us.
Okay. Cheers, man. Cheers, everybody.
All right. See you, LG.